Welcome back to the deep dive. Today, we're going deep on CPI. That's the Consumer Price Index. And
Right.
you might be thinking,
Yeah.
CPI, another economic indicator. How does this even affect me and my money?
Yeah.
Well, CPI is not just some random number out there.
No.
It's actually the puppet master behind how much your money is worth, like your purchasing power.
Yeah.
And it can really impact your investments. So we're going to unpack how all of this works. And trust me,
Okay.
there's going to be some aha moments along the way
I think so.
that might just surprise you.
For sure.
Yeah.
What I find so fascinating about CPI is how much it really influences your daily life without you even realizing it.
Yeah.
Like, did you know that in Canada, people spend
Mhm.
roughly 16% of their budget on food,
Wow.
and then another 29% on shelter,
Oh, my God.
and 16% on transportation?
That's a lot.
Yeah. So these are the kinds of everyday expenses that actually
Yeah.
factor into calculating CPI.
Mm.
And it ultimately reveals how far your money can really go.
So it's like we're kind of like getting behind the curtain of the economy
Yes.
and seeing how things are actually made.
Yeah.
But instead of pork, it's prices.
Exactly. Think of it as like a giant shopping cart
Mhm.
filled with everything from like your morning cup of coffee
Okay.
to even your monthly rent payment.
Wow.
You know what I mean?
Yeah.
So economists, they track the prices of all these items over time, and that creates this metaphorical basket of goods
Yeah.
and services that represents what the average person is buying.
Yeah.
And those changes in the cost of this basket, well, that's how we know how much inflation is actually happening.
Okay, so instead of just looking at a bunch of numbers, we can actually picture this
Yeah.
giant shopping
Yeah.
cart and how the price changes over time.
Exactly.
But how do they actually
Yeah.
crunch the numbers?
So it's a two-step dance. The first step, they track the prices of everything in that metaphorical shopping cart.
Mm.
And then they have to assign weights
Okay.
to each item based on how important it is to people's budgets.
Hmm.
So like housing, for instance,
Yeah.
that's going to get a much heavier weight than something like entertainment
Right.
because it eats up a bigger chunk of most people's incomes.
So it's like a weighted average.
Exactly. It's like a weighted average.
Okay, that makes sense.
Yeah.
But you mentioned something about comparing these prices to a base year.
Right.
What's that all about?
That's where the historical context comes in.
Okay.
So in the U.S., the base year is actually 1982 to 1984.
Hmm.
So when you see a CPI number like 299.2, which
Mhm.
is the value for 2023,
Okay.
it means that on average, prices have increased by almost 200% since that base period.
Whoa, almost 200%.
Almost 200%.
So like a pair of jeans that maybe cost $20 back then would cost like almost $60 today.
That's exactly right.
That's wild.
Yeah, it is wild. And it's not just the U.S. We see this kind of trend globally.
Right.
For example, in the Philippines
Okay.
in November 2024.
Yeah.
Their CPI was 127
Okay.
with a year-on-year growth of 2.5%.
Mm-hmm.
But their average CPI growth is 5.9% year-on-year,
Wow.
which is much higher than the recent U.S. figures.
So inflation is really playing out
Yeah.
differently
For sure.
around the world,
Totally different.
which is a good reminder, I guess, that we
Yeah.
can't look at
Like
things on
this-
isolation.
Yeah. You can't just look at what's happening in one country and be like,
Yeah.
this is how it is everywhere.
Right.
It's like
Yeah.
comparing different ecosystems, right?
Right.
Each one
Yeah.
has its unique conditions that influence how the inhabitants thrive or struggle.
That's a great analogy.
Yeah.
Okay,
Yeah.
so we've got a handle on how CPI is calculated
Yeah.
and how it reflects inflation over time.
Right.
But let's talk about how this actually impacts our investments.
Okay.
Like, for example, what about the stock market?
Right. So with stocks, it's tricky
Okay.
because imagine a company that's trying to adjust to all these rising prices for materials.
Yeah.
But at the same time, they're dealing with consumers who have less spending power
Right.
because of inflation.
Yeah.
You know, it's like
Yeah.
this tightrope walk. Some companies can raise prices,
Okay.
just pass on those costs to consumers and maybe even increase their profits.
Right.
But other companies, they might struggle if people just simply can't afford to buy as much.
So some companies can ride the wave
Yeah,
while others get wiped out.
exactly.
It's like, surfing.
It is like surfing.
You need the right skills and the right timing to catch the wave
Totally.
and stay afloat.
Yeah, that's a great analogy.
And on top of all that,
Yeah.
we have to remember that inflation often leads to
Right.
rising interest rates,
Right.
which complicates the whole stock market landscape even more.
Of course. When interest rates go up,
Yeah.
borrowing money becomes more expensive
Yeah.
for the company.
Right.
So that can impact their growth as well.
So rising interest rates
Yeah.
can put a brake on company growth.
Uh-huh.
And I bet this also impacts how investors view stocks, too.
Absolutely.
Yeah.
Because when interest rates go up,
Mm-hmm.
other investments,
Yeah.
like bonds,
Oh.
start to look a bit more appealing
Okay.
because they offer
Yeah.
a more predictable return
Okay.
when the market is volatile.
Interesting.
Yeah,
So it's all about understanding how investors react
absolutely.
to these shifting
You got to,
economic tides.
yeah. So CPI data
Yeah.
can actually be like a crystal ball for investors. It can help them kind of anticipate
Okay.
how the market might react,
Gotcha.
So savvy investors,
Yeah.
they pay close attention to CPI reports,
Right.
especially if those actual numbers are higher or lower than what economists predicted.
Hmm.
So for instance,
Yeah.
when CPI is higher than expected,
Okay.
we often see value stocks perform really well.
Hold on. Can you explain what value stocks are?
Oh, of course. So value stocks are stocks that are considered
Okay.
undervalued by the market.
Okay.
So they may be overlooked for various reasons,
Yeah.
but their fundamentals suggest
Okay.
that they're actually worth more
Mm-hmm.
than their current price.
Right.
And when inflation is higher than expected,
Yeah.
these value stocks,
Mm-hmm.
they tend to outperform the market.
Okay.
On the other hand,
Yeah.
if CPI is lower than anticipated,
Mm-hmm.
investors often shift their attention to the country's key commodity
Okay.
because that can signal future inflation trends.
Interesting. So
Yeah,
CPI can really shake things up
absolutely.
in the stock market,
It got
creating both risks
Yeah.
and opportunities
big time
for
Yeah.
investors.
Yeah.
Gotcha. But what about bonds?
Okay, so bonds,
Mm-hmm.
they can be especially sensitive to inflation
Okay.
because they typically pay a fixed interest rate.
Right.
So let's say you buy a bond
Uh-huh.
that pays 3% interest a year, but then inflation jumps to 5%.
Ouch. That doesn't sound good.
Not good,
Yeah.
because you're essentially losing money,
Right.
even though you're earning interest,
Yeah.
because the real return
Yeah.
on your investment after accounting for inflation
Mm-hmm.
is actually negative 2%.
Wow.
You're getting paid in
Yeah.
increasingly less valuable dollars,
Right.
and that erodes your purchasing power over time.
So how do bond investors even use CPI
Yeah.
to deal with all of this? It sounds like they need to be extra careful when
Yeah.
inflation is rising.
They do. They do. They rely heavily on CPI data
Okay.
and also PPI data, the Producer Price Index,
Hmm.
which tracks prices at the wholesale level.
Okay.
And by monitoring these indicators,
Yeah.
investors try to anticipate those inflation trends
Right.
and make informed decisions
Okay.
about buying, holding, or selling their bonds.
So it's like trying to predict the weather.
Yes, it's like predicting the weather.
But for the economy, you need to know which way the wind is blowing
Uh,
to adjust your sails.
You got it.
All right.
Yeah.
So we talked about stocks,
Yeah.
bonds.
No.
But what about real estate?
Okay, so real estate.
Yeah. I've always heard that real estate is a good hedge against inflation.
Yeah.
Is that true?
It does has this reputation for being a good hedge.
Okay.
And I think there's some truth to that.
Okay.
Because think about it.
Mm.
As prices go up,
Yeah.
the value of property
Mm-hmm.
and rental income,
Right.
they tend to rise as well.
Okay.
So you're holding on to something tangible.
Yeah.
And in a lot of cases,
Yeah.
that asset appreciates
Okay.
during inflationary periods.
Right. It's like owning a piece of something real.
Exactly.
It's not subject to
Yeah.
these like market whims.
Right.
Yeah.
However,
Okay.
it's not a guaranteed win.
Okay.
The relationship between CPI
Yeah.
and real estate
Uh-huh.
is a little bit complex.
Yeah.
Interest rates
Yeah.
play a huge role in this
No.
because they can impact affordability
Right.
for both buyers
Mm.
and sellers.
Right.
And then the overall economic climate
Yeah.
can influence demand.
Right. Right. So it's not a simple
It's not just this simple
equation.
one-to-one relationship.
There are a lot of moving parts
Many moving parts.
to consider.
Yeah. But CPI is definitely a valuable tool
Okay.
for real estate professionals
Mm-hmm.
to help them assess affordability,
Right.
identify potential investment opportunities,
Okay.
and even negotiate rental rates.
Okay. So CPI is just one,
It's one piece
piece of the puzzle.
of the puzzle. Absolutely.
Okay. We talked about stocks, bonds, real estate.
Yep.
But there's one more area that I really want to touch on,
Okay.
which is financial planning,
Yeah.
especially for retirement. Like,
Right.
how does CPI play a role?
CPI
Yeah.
is essential for long-term financial planning. especially when you consider that retirement can span decades.
Yeah.
Inflation can take a real bite out of your savings over that time.
That's scary.
It is scary if you're not careful.
Yeah, it's like planning a road trip and not knowing how much
Exactly.
gas is going to cost,
Yeah,
in the future.
totally.
Yeah.
Financial planners use CPI data
Oh.
to estimate
Mm,
your future living expenses.
gotcha.
So by factoring in
Yeah.
projected inflation,
You're right.
they can help determine how much you'll need
Right.
to maintain your lifestyle in retirement.
So it's not just about how much you save.
No,
It's
it's
about
about the value.
the value of that savings.
Exactly.
Years down the road.
Yeah. And CPI can help you calculate
Okay.
the real return on your investments.
Okay.
Remember, that percentage gain you see on paper,
Yeah.
well, it doesn't tell the whole story. You have to adjust for inflation to
Yeah.
really see how much your purchasing power
Yeah.
has actually increased.
So, like, a 5% return might not actually feel like a win
Right.
if inflation is 3%.
Exactly.
You're kind of just
You're just treading water.
treading water.
Yeah.
Yeah.
And CPI also plays a role
Okay.
in setting those retirement savings goals.
Hmm.
So you can set a target that makes sure you'll have enough
Great.
to live comfortably,
Yeah.
even if prices continue to rise.
It's like building an inflation buffer
Sir.
into your savings plan.
Exactly.
Yeah.
And it's really important to remember
Okay.
that CPI increases can actually
Yeah.
disproportionately affect
Mm.
lower-income households.
Okay.
They feel the pinch of inflation more acutely
Yeah.
because things like food
Yeah.
and energy and housing,
Right.
all of those make up a larger portion of their
Yeah.
budget.
Right.
And those things tend to see the most price hikes.
So CPI isn't just
Yeah.
some abstract
Right.
economic indicator.
Not at all.
It really does impact people's lives
It really does.
and their financial well-being,
Real-world impact.
especially for those who are most vulnerable.
For sure. Understanding CPI is not just about being a savvy investor.
Right.
It's also about being an informed citizen.
Yeah.
It helps us understand those economic policies
Yeah.
and how they impact different segments of society.
Well said.
Thank you.
Okay. So we've explored
Hey,
how CPI affects different assets,
Okay.
financial planning,
Right.
but now we need to talk about what we can do about it.
Yeah, what can we do?
What are some strategies
Mm.
investors can use
Yeah.
to manage their portfolios when inflation is a concern?
So there are a few key strategies to consider.
Okay.
The first and foremost is diversification.
Oh, yeah.
We've all heard the saying,
Yeah.
don't put all your eggs in one basket.
Right.
Well, it
Uh-huh.
really applies here.
Yeah.
Spreading your risk across different asset classes.
Uh-huh.
It's like building this financial safety net.
So instead of betting on one horse,
Exactly.
you're spreading your bets across the field.
Yeah.
Yeah.
And in addition to stocks and bonds,
Mhm.
there are also inflation-hedged assets,
Right.
like real estate.
Yeah, we talked about that.
We talked about that.
Yeah.
But there's also things like commodities, like gold and oil,
Right.
which tend to rise
Yeah.
during inflationary periods.
Okay.
And then there's something called TIPS,
Okay.
Treasury Inflation-Protected Securities,
Oh, wow.
which are designed to keep pace with inflation.
So you're trying to build a portfolio
Yeah,
that can weather the storm
exactly.
of rising prices.
You got it.
What are some other strategies we can think about?
You could focus on growth stocks.
Okay.
These are companies with the potential to outpace inflation
Right.
with their earnings growth.
Yeah.
So even if prices are going up,
Mm-hmm.
these companies
Yeah.
are ideally growing even faster.
Yeah.
So even
Okay.
if the tide is coming in,
Yeah.
these companies are still building their sandcastles.
For building higher and higher.
Higher and higher.
You got it. But
Yeah.
regardless of your investment approach,
Yeah.
active management is key,
Okay.
especially when inflation is a concern.
Right.
You know,
Yeah.
regularly monitoring that portfolio,
Yeah.
making adjustments as needed,
Uh-huh.
really helps you adapt
Yeah.
to the changing conditions.
Right.
And that might mean
Yeah.
rebalancing your assets,
Okay.
tweaking your investment strategy, or even working with a financial advisor
Okay.
to navigate all the complexities of an inflationary market.
So being informed and staying proactive is essential.
It's so important.
CPI is not something you can
Wow.
just set and forget.
Right.
You have to keep an eye on it
Keep an eye on it. Pay attention.
and adjust your course as needed.
Absolutely. Knowledge is power when it comes to managing your investments. Well, I think we've given our listeners
I think so.
a good foundation for understanding CPI
Mhm.
and how important it is.
I agree.
they now know
Uh-huh.
how it's calculated,
Yeah.
its historical context,
Right.
how it impacts different assets,
For sure.
even financial planning for retirement.
Absolutely.
And I think importantly now,
Yeah.
they understand that CPI is just one piece
That is.
of this much larger economic puzzle.
It's the start
Yeah.
of a much deeper exploration.
Yeah.
It's just a reminder that there's always more to learn.
Couldn't agree more. Before we wrap up this part of our deep dive,
Okay.
I want to leave our listeners with something to think about.
Right.
So we've talked a lot about CPI,
We have.
but it's just one piece of the puzzle.
It is. It is.
What other indicators could we be looking at
Right.
to really get a sense of
Yeah.
the economic landscape?
That's a great question. It's like we've learned to read one vital sign,
Yeah.
but the economy, it has this whole body of indicators
Right.
that tell a more complete story.
So what other checkups
Yeah.
should we
About
be
other checkups.
paying attention to?
Well, one key indicator is GDP, or gross domestic product.
Okay.
And it measures the total value of goods and services
Okay.
produced in a country.
Right.
So a growing GDP
Mm.
generally signals a healthy economy,
Okay.
which can be good for stocks.
Right. So strong GDP means businesses are thriving,
Right?
people are spending,
Yeah,
the economy is moving.
exactly.
But what about like
Yeah.
unemployment?
So unemployment rates,
Yeah.
those are definitely important too.
Okay.
Because high unemployment
Uh-huh.
can actually signal economic weakness.
Right.
And that can lead to like decreased consumer spending
Okay.
and slower growth for businesses.
So if people aren't working,
Yeah,
they're not spending, which
exactly.
can ripple throughout the
Right.
entire economy.
The whole thing.
And then we also have
Yeah.
interest rates, which we touched on
Interest rates?
a little bit earlier.
Uh-huh.
And those are controlled by central banks.
Right. Yep. They use interest rates
Yeah.
to try to control inflation
Mm-hmm.
and stimulate growth.
So they're like the
Yeah.
economic puppeteers
You could say that.
trying to keep everything balanced.
Trying to keep everything in check.
But how do we, as like
Yeah.
everyday investors, make sense of all this?
Right. It's a lot.
It's a lot to take in.
Yeah, it can feel overwhelming.
Yeah.
I mean, a good place to start
Yeah.
is by following financial news
Okay.
and economic reports.
Right.
There are a lot of reputable sources out there
Yeah.
that break down these indicators
Okay.
and explain what they mean.
Right. So we don't have to be economists
You don't have to have a PhD.
to understand all this.
Exactly. It's about being a more informed investor.
Right.
Understanding the forces at play
Yeah.
and making decisions
Mm-hmm.
that align with your financial goals.
So it sounds like CPI is really a gateway to understanding more about
I think so.
the economy
It is. It is.
and how it impacts
Yeah.
our investments.
I like that. It's like learning a new language.
Yeah.
Once you know the basics,
Yeah.
you can start to have those more meaningful conversations.
And just like any language,
Yeah.
the more you practice,
Yeah,
the more fluent you'll become.
absolutely.
Mm-hmm.
The more comfortable you get.
Okay.
Yeah.
So I think our listeners are now equipped with a
Yeah.
solid understanding
That's
of
it.
CPI and how important it is.
I think so too.
They know how it's calculated, its
Mhm.
historical context,
Yeah.
how it affects different assets,
Right.
and even how it can play into planning for retirement.
And hopefully they're also interested in exploring
Yeah.
those other economic indicators
Right.
to get an even deeper understanding of the financial landscape.
Absolutely. Before we sign off,
Yeah.
I want to do a quick recap
Okay.
of the key takeaways
Let's do it.
about CPI
Okay.
and how important it is. All right. So first off,
Yeah.
CPI measures inflation.
Right.
It's the rate at which prices are rising for
Mhm.
goods and services,
Yeah.
and it's calculated
Yep.
by tracking the prices of a basket of and
Right.
services
Yeah.
that represent what the average consumer buys,
Mm,
and then comparing those prices to a base year.
exactly.
And we also learned that CPI isn't just a U.S. thing.
Right.
It's a global metric.
Global.
And inflation rates can vary
Yeah, they can be totally different.
around the world.
Yeah.
We saw that in the Philippines.
Yeah, great example.
They've actually experienced much higher
Right.
CPI growth
Way higher.
than the U.S. in recent years.
Yeah.
And of course, we explored how CPI affects
Mm-hmm.
different investment assets.
Right.
Stocks react in complex ways.
Yeah. That's hard to say.
As CPI changes,
Yeah.
some companies actually benefit
Yeah.
from those rising prices,
They love it.
while others might
Yeah.
struggle. Bonds, on the other hand,
Right.
are generally more vulnerable.
Yeah, way more.
to inflation because
Yeah.
of those fixed interest rates.
Exactly.
Real estate.
Yeah.
We talked about how that can be a hedge
Can be. Yeah.
against inflation,
Right.
but
Yeah.
it's also affected by things like interest rates and the economy.
Yeah. A lot of moving parts.
Yeah. We also discussed how important CPI is
Absolutely.
for financial planning,
It is.
especially when thinking about retirement.
Right.
CPI helps us estimate those future
Right.
living expenses,
Yeah.
calculate the real return on our investments,
Yeah.
and set those appropriate savings goals
Right.
that account for inflation.
Yeah.
And finally, we discussed strategies for managing a portfolio in an inflationary environment. Diversification
Big one.
is key.
Yeah.
Spreading your risk
Yeah.
across those different asset classes.
Stocks, bonds, real
Or
estate.
stocks, bonds, real estate, even commodities,
Oh, oil.
like gold and oil.
Yeah.
You might consider focusing on growth stocks
Yeah.
or actively managing your portfolio to adjust to those changing market conditions.
That's right.
Excellent summary.
Thank you.
I think our listeners are now well equipped
I think so.
to navigate the world of CPI
Yep.
and its impact on their investments.
Oh, boy.
But before we let them go,
Okay.
I want to leave them with
Oh.
one final thought-provoking idea.
Okay.
While CPI is a valuable snapshot of inflation,
Mm-hmm.
it's really just one piece of the economic puzzle.
It is.
What other indicators could you explore
Right.
to get a more complete picture
Yeah.
of the economic landscape
That's the question.
and its potential impact on your investments?
Every investor should be thinking about that.
Yeah, that's a really good question for everyone to be thinking about.
Yeah.
All right, well, that brings us to the end of our deep dive on CPI. I hope you found this helpful. I think we covered
I think we got a lot in the,
a lot of ground.
yeah, from how to calculate it to how it affects different investments
Absolutely.
and even how it affects your retirement.
Totally.
Really important stuff.
And remember, as we always say,
Yeah.
knowledge is power.
Knowledge is power.
So the more you know about
Yeah.
what's going on in the economy,
Absolutely.
the better decisions you can make with your money.
Right. And the more you learn,
Yeah.
the better you can kind of navigate these
Yeah.
complex
Yeah.
financial waters.
Totally.
So keep learning. Stay curious.
Yeah. Never stop exploring
Yeah.
the world of finance and investing.
Absolutely.
Until next time,
Yeah.
happy investing.